Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How's it going today? Hope you're having a good day. Welcome to our FinTips series. Real short, simple videos that we go over. It's a whole playlist on our YouTube channel. You can check it out, where we just kind of cover something new real quick, get the hell out of the way, let you get back to living life. It's going to be a lighter week this week because, well, it's Thanksgiving week, and that's how things go. So I'm going to start by teaching you something that I just taught to our customers so that you can, well, maybe you can learn a little bit. And if you learn something, maybe you will check us out at jazzwealth.com. Marketing, see? Stocks above the 50-day moving average. You know what that means? A lot of people talk about it. You see it on TV. They'll say, oh, the stock's above the 50-day moving average, 200-day moving average, things like that. I want to expand on that today and get a little bit geeky with you here for a moment. If you're not familiar with the stocks over a 50-day moving average, all that means is, in my case, if you're in the dojo, our private portal for customers, it's going to be anything above the blue line. If the stock price is above the blue line, then all that means is the stock is trading above its 50-day average. Add up the last 50 days, divide them by 50, and you're basically seeing that price. So if a stock is trading above the 50-day moving average, all it's really telling you visually is that the stock price is accelerating in some degree. It's trending higher, faster than it had in the last average 50 days there in terms of price there. So that's one way to look at it. A lot of people will look at the market themselves and they'll say, is the stock market above the 50-day moving average? Well, that's acceptable as well. Here's the S&P 500 currently trading above the 50-day moving average. That's a good sign. It's a sign of strength. It's a sign of happiness. Investors are bullish for the most part. NASDAQ, you've got the same thing. How about we do Apple? You guys like Apple? Apple is barely trading above the 50-day. It keeps going above and below it, so the momentum is slowing is what you could learn from that. Something like Tesla trading above the 50-day moving average. I know it's popular, and so that one is really interesting from a stock that's from the perspective of a stock that's moving up rather quickly, which you can see. The bottom line is a 50-day moving average is not a magical tool. It's just a way to quickly reference how the stock price is moving. Well, we like to take it a step further, and what we do is we actually track the number of stocks in the S&P that are trading above the 50-day moving average. And so in our Notes from Jazz email this week, I sent out, let me pop it up here for you. So each week I send out an email to customers and go over the markets, go over what we're doing here. I type out the whole thing. There's nothing automated. Our last one here, we had a little education session. Down here, we were talking about stocks over the 50-day moving average. Here's what we have. Hopefully you can see that there. We were talking about the number of stocks in the S&P trading above the 50-day moving average, and then what does that mean about performance? See, if you can understand whether the stock market is about to perform well or is coming across a period where it normally doesn't perform as well, then you get your mind right? You can understand whether you should be excited or whether you can walk away for a little bit. And so what we did is we plotted this for you to show the range. So in the S&P 500, if zero, see if we can zoom in a little bit. Hey, there we go. If between 0 and 10% of stocks are trading above the 50-day moving average, then here's the basic performance on average going forward. In other words, if 10% or less of the stocks are above the 50-day moving average in the S&P 500, the following week tends to be about a 0.5% gain average. 1 month, 1.25%. 3 months, pretty nice. 6 months, looking pretty good. 1 year, good as well. If 10 to 20% are trading above, here's the number of times it happened, and then here's the performance. Well, where we're at right now, as of the taping of this, we're at about 89%. So we're in this category right here. When we have 89% of the stocks above the 50-day moving average in the S&P, that is actually quite a bit. That's good. That's good news. That happens a lot. However, the performance is not as good as other periods of time relative to how many stocks are above the S&P. So it's not as interesting from a performance perspective. In fact, it ranks kind of about average in terms of market performance. You can see that when there are more than 90% of stocks above the S&P, in the S&P, that doesn't always happen, and so that's more rare. It's a little extended. You get the idea that the stock market has had a good run. Performance tends to be a little bit weaker, and in this case, when 90% or more of the S&P 500 stocks are above their 50-day moving average, the stock market enters a period of its worst performance relative to all other ranges that we've plotted. So this is just a fun, kind of fast way to say, hey, we're entering a point where the stock market tends to underperform, it tends to pull back, it tends to go sideways, but we know it's not going to be crazy. The best times are when nearly no stocks are above the 50-day moving average. The actual best performance was when there's 10 to 20% of the stocks above the 50-day moving average. Why do you think that is, huh? That's because everybody's buying the discount. They're excited for the bounce there. But basically, I just wanted to show you a really quick way to take a look at that. You have stocks trading above the 50-day. You have markets trading above the 50-day. Then you have the number of stocks inside of an index trading above the 50-day as a way to measure expected forward performance. Of course, anything is possible. You guys know that. The stock market may do whatever. But here's a fun way to get your mind right around what to expect. We're going into the holidays. We're at this point 90% above, almost over the 50-day moving average. If you saw sideways performance or a slight pullback, it would actually be perfectly average. So you know now what to expect. Hey, I hope this video helped you and taught you something maybe a little bit different. If not, I understand. We'll try again on Wednesday and see what happens. But you enjoy the rest of your day. If I helped you in some way, please hit the subscribe button, thumbs up button, or check us out at Jazz Wealth. You know, it's marketing, right? It's what we do. Show you a little bit. Hope you remember us. Check out the shirt. We'll see you later.